something qualifies as money if it has these three attributes of a medium of exchange, a unit of account, and a store of value. But that, if you think, is like saying, I'm looking at a Monet painting and I define it as paint on wood or on canvas. It's kind of like, yes, it's accurate. Those are the technical characteristics of it or the specifications of it, but it doesn't really show what we are looking at the Monet painting. So when we talk about money, let's look back at how it started.
Welcome to Long Story Short, where we explore how the world of money is changing through technology, markets, and new forms of capital. In this episode, we're joined by Dr Efi Pylarinou, an author and leading financial technology consultant. Efi is widely considered to be one of the top global fintech and tech thought leaders, with over 200,000 followers on LinkedIn. We discuss her perspective on how digital money is evolving and the rise of central bank digital currencies, as blockchain and tokenization begins their slow but steady infiltration into mainstream finance. We hope you enjoy the conversation, and if you do, please make sure to subscribe to be notified about future episodes. Efi, thank you so much for being here.
Thank you, Jessica. And we too go back more than a decade when we both were starting to explore publicly the innovations in financial services. We were co-authoring on Daily FinTech. You were, I believe, on Tyro Payments, right?
Yes.
And then you continued on your entrepreneurial journey. The world has changed, we must say, and maybe we get to talk about those changes that
It
have
has
happened.
changed.
Yeah, they've come about. It's not only technology, right? There's so many forces at work at the same time. Technology is an enabler, but there's all these other trends that are converging or overlapping and shaping financial services. And these have to do with broader trends in our society, the digitalization, the globalization, the policies, the regulations, the geopolitics, everything is really shaping. In financial services, I always like to say one thing is constant, it's behind every economic activity, and therefore it might not be the primary goal, but it is behind everything that happens. So it's important for everybody, not only those that are involved directly in financial services, but anybody in business and in society.
That is such a great grounding and positioning for this podcast, because this is all about the future of money and it touches all of us, right? And understanding where it's going is so important. So just picking up on something you talked about there, I think that kind of goes to the first question I wanted to ask you is, you've been in finance your whole career and you've since devoted a chunk of that time and ongoing to financial innovation. What's happening at the bleeding edge of finance, consulting with companies and being a thought leader in the space. Why does it fascinate you? What motivates you to delve into this world and really get to the core of what's happening and what's going to happen?
I like to think of our health in different versions. There's our physical health, our mental, psychological health, and our financial health. I think those three are really core to everybody as individuals, as societies, communities. And that part of the financial health is maybe a bit less understood, or for all sorts of reasons. We may lack education, there might be cultural taboos, there might be, beliefs that have to do with our upbringing, and I find it very fascinating. Although I didn't grow up in a family and in a community, in a world that was focused in financial services. So my interest, it doesn't come, naturally or organically. Like, if your family or your social environment is into music, inevitably you are in that world. I wasn't in that. Serendipity led me into financial services at a time where the culture was very different, like in the 80s
Mm.
and the 90s, where there was a lot of asymmetric information, if you want. The professionals had an information advantage that has narrowed a lot with the democratization of data, of different services. And all this really interests me because it is intertwined with our social activities. And I always say, I wish I studied more history around financial services to interpret everything in a more holistic way, I would say.
There's
So,
still time.
yeah, there is still time, and there are opportunities where we go back to, you know, understanding how we got here. How are we today here where we are? Money is more digital. Um, Last week here in Switzerland, where I'm based, there was, here it's the closest to a democracy that it gets. There's many referendums per year, and people get to vote on many topics. And one of the topics that they voted for was to put in the constitution the right to preserve cash,
Interesting.
right?
Very
So,
topical.
yeah, very topical.
Yeah.
So even though when you look at Switzerland, the domestic peer-to-peer payment app, Twint, is extremely successful. The metrics are just really very impressive. The adoption from individuals, from businesses, and yet the sentiment that we want to have that right of cash being available, even if we don't exercise it. These are topics that show, the value shift, how things have changed, what are a top concern. And I'll stop here.
That's really interesting. I didn't know about that referendum, but it's such a topical conversation across so many economies. We see the demise of cash. We see a much more digitized payment experience. We'll talk a little bit later about some of the costs that are arising because of that and get your views on that. But just on that topic, because it is quite fascinating. So the sentiment in Switzerland was, well, no, we still want cash. We still want physical cash. We
Yes,
still want the right to have paper money
yes,
coinage.
yes, yes,
Interesting.
yes,
Interesting.
yes,
So that kind of brings us probably to another point, right? Which is what is this sort of, social contract that we have as a society with money? And I know that, in your lectures, you talk about money as a medium of exchange and a unit of account, these very basic principles of what money is, but that money is also a shared story between us and between cultures. It's a shared language, that social contract point. If you don't come from a finance background, how do you sort of interpret that? How would you explain that to someone to give them some understanding of that?
yeah. I think the way to look at this is to go back in history and look at the evolution of money. As you said, if you go to business school or anything around finance and economics, you're taught that textbook definition of money. Something qualifies as money if it has these three attributes of a medium of exchange, a unit of account, and a store of value. But that, if you think, is like saying, I'm looking at a Monet painting and I define it as paint on wood or on canvas. It's kind of like Yes, it's accurate. Those are the technical characteristics of it or the specifications of it, but it doesn't really show what we are looking at the Monet painting. So when we talk about money, let's look back at how it started. It wasn't paper notes or coins. Recent research has shown that the first kind of money were these tally sticks. And the interesting part is that they appeared in different parts of the world. And at the time, obviously, there wasn't that connectivity that we have today. So you saw tally sticks appearing in England, in China, in Maya cultures, and what they were typically bone, out of bone. You would carve a V shape that the size of the carving would indicate the debt that you owed. You know, a small
Mm.
carving would be 10 pounds or whatever, that type of thing. And people exchanged agreements, if you want, that I owe you so much with these tally sticks. So you see, this is just an agreement, a way of having a social contract. And then later on, we went on to um, having these bills of exchange that were this is like the medieval ages. And again, here it's an agreement that if you're going to deliver XYZ, and that's the value between, let's say, Florence, because that's where it was invented as a way of a protocol to trade long distance. So maybe between Florence and somewhere in up in northern Europe, in Brussels. That was the bills of exchange. And again, think of it, it's an agreement, it's a shared way of making sure that we agree that this is what I owe you and you owe me. And Yuval Harari talks about this as the most shared story. And if you think of it, when we look at financial crisis, let's say in Zimbabwe or other countries, with inflation, what is happening really? We're losing trust in the government, the institutions that issue the money. It's it's a trust social crisis, what that we call a financial crisis. I mean, anybody that's seen the Mary Poppins movie, right? The Run on the Banks, right?
Yes.
That's another social crisis. So really, it's all about understanding that money is about trust to these institutions that and the way we have agreed to organize in our societies through government, central banks, commercial banks. Once we lose trust in these institutions, then that social contract breaks down. And that actually links to why Bitcoin, that emerged coincidentally, that's a big question mark, in 2008, which was exactly the great financial crisis,
Mm.
right? The subprime crisis originating from the US and affecting the entire world. And you have Bitcoin emerging, which is what? It's a provocation to a social contract that is centralized through government, central banks, and these transit institutions, and is offering an option of a technology that is decentralized, not governed by any one individual, and therefore a different way of exchanging value with none of these intermediaries, right? And without between strangers. So that is the innovation, and you see the innovation isn't technical; it's social, really. it offers a technology to do this. We have this choice, and we can talk about whether it's happening or not. But this is kind of how one can think of the evolution of the story, the social contract.
I really like that. I mean, I feel like the commonality across time or history is we seek trust or we seek trusted mechanisms. And like you said, they might evolve from tally sticks to bills of exchange to fiat currencies issued by governments to eventually peer to peer exchange mechanisms. But the bedrock, like you said, is the social contract we're all seeking to obtain, which is a form of trust between parties. And yeah, I think that's a really interesting way of thinking about it, because so many times we think about blockchain and Bitcoin as technology innovations without really looking underneath or deeper as to what's driving that. I like that, Efi. So just talking about those forces that drive money, and I've watched you speak on this a few times, this holy trinity of forces. You talk about they need to combine in order to keep transforming and evolving finance. Could you explain a little bit about what these forces are that make up the Holy Trinity, and if you're seeing them already happening in different
Yes.
forms of transformation?
Yeah, I mean, again, it's the same theme. We see these transformative technologies, blockchain in this case, but AI too, and we'll have an opportunity to talk about that. And they're changing the way we exchange value, and therefore how we collaborate and organize. But behind that, again, there's core philosophical beliefs or values that are behind these and are changing. So, for example, we have traditionally exchanged values through networks that are either closed completely, like walled, or permissioned, meaning that to be to participate in a network, you have to be a member or a filtered or on a white list to be to participate. And the simplest example is if we think of our commercial banks, you need to open an account, be qualified to be in that network to be able to send money. And then we moved through technology to what you said before, peer to peer networks, where we don't need to be permissioned by a bank, but we could send money or value directly between us. And we can take that to a limit where there's permissionless networks. Anybody can participate. And the best example that is not strictly financial is the internet, right? You
Mm.
don't need any permission to participate in the internet. And now in finance, we have such permissionless networks, what we call decentralized finance. And there is a trend along with the broader open source trend of code that is pushing us towards looking at ways of exchanging value and money through these open permissionless networks. So that's a fascinating trend that is happening and unfolding. It is early,
Mm.
but institutions, big institutions like JP Morgan, like BlackRock, are like PayPal, they are getting involved in more permissionless networks and creating liquidity pools that would be unimaginable 10 years ago. And they do this, giving you some examples, specifically by deploying their stable coins in these open networks. And I'm talking, these are huge institutions,
Mm.
and they issue private money, right, on these blockchains that are open and permissionless. So that's one trend that is reshaping our economic activity. And then there's two other trends that we should be watching. One is that we need the development of standards for this new world, the new world that continues evolving and is going to what I think of the next phase of digitalization. We've gone through the first phase of digitalization, which is, all this mobile banking, for example, the peer-to-peer apps, the what we call the robo advisors, the ease of investing again through apps. All this era, I think of it as the first phase of digitalization. Now we're going to the next phase of digitalization, which is really about being able to transfer assets, not just a ledger, really the value of the asset, and we need standards for that. So that behind all that we hear in the market about tokenizing assets, whether it's existing financial assets like stocks and bonds or other assets like real estate, and moving titles of ownership, the title of your car, the title of another asset, but really transferring that instead of just a double entry ledger. All that requires new standards. So that's another very big trend that is worth watching, because if we develop good standards, there'll be more interoperability and we will be able to unlock value. And then the last trend of this holy trinity that I believe is kind of working and morphing that this new world is the interaction of artificial intelligence and blockchain. So think of it as um, where a lot of digitalization will happen, where we delegate to our AI agent different activities, because AI agents can optimize on our behalf 24/7 tirelessly. And doing that on blockchain rails is the only way to do that, because AI agents can't operate with, opening accounts at the regular bank and having a credit card. So we're moving to a world where we will be empowered by AI agents on blockchain. So all of these three major trends are converging, and it's dazzling, it's
Yeah,
mind-boggling. It
yeah.
is dynamic. It's not happening at the same pace in different regions, and it heavily depends on regulations and policies. And we have
Mm.
seen that, with the Genius Act, that has really moved the market, especially in Spain, in stable coins.
Mm. It feels a little bit like the the primordial soup, and all of the different bacteria and eukaryotes and different organisms are floating around in the primordial soup, and then suddenly life emerges, but you never would have imagined what that life could have looked like. And when I hear you talking about those forces, the holy trinity, that's sort of what comes to mind. And the other thing I think is, probably lots of people on this call have been familiar with opening a bank account and having to do know your customer type, prove that you are who you say you are, show me your driver's license, show me your passport. But know your agent surely will become a thing as well. And it does feel like the new world of finance is more set up to accommodate that than, say, the old world of finance that most of us still operate in.
Yeah, Jessica, I like to think of, up to now, the main economic participants are individuals, you and me, and businesses as legal entities. Those are the two main types of economic participants. And now I see that we will develop policies and laws where agents will become proper legal participants, much like businesses. I mean, that's another story, right? That's another fiction. Businesses, what are
Yes.
businesses? not the building, right? Or the offices, right? They are these intangible entities that we have created. We have imagined them, we made them real, and then we developed laws around them, different types of businesses. So, again, those are construct or conceptual hallucinations, if you want, that serve us, right? To develop the trades and the agreements and the collaborations. And I think that this will happen with agents. And I don't know, will it take 5 years? Will it take 10 or 20 years? Who knows? And where it will come from, right? Which, if you look again historically, it's interesting to see where the first stock exchange, where the first company was registered, all these items to look back historically and then maybe make some sense of where to expect that the new forms
Mm.
of entities will come out of. But this is the
Well,
exciting world.
I think that talks to your first point, right? We can look to history to inform the future. And you mentioned it was Yuval Harari, his book. He talks a lot about the formation of companies. And like you said, this idea that something could exist that doesn't actually have a human form to it. And why would agents be different? I think that's spot on. Um, I want to move a little bit now to this cash discussion that came up
Yeah.
at the start of the call, but talk about the new developments that are happening. I know you've interviewed a lot of thought leaders in this space, in the digital currency movement. So, people that are working on central bank digital currencies, I think they also go by the acronym CBDCs. Uh,
Yes.
can you break down for the audience very simply what what banks or governments are trying to achieve with a CBDC and what relationship that might have to, say, cash as we know it, or how CBDCs sort of are trying to plug a future gap around that type of central bank issued currency?
Yeah. I like to say that there are many flavors of money, or CBDCs and other types, as many as ice cream flavors out there. The possibility, right? Um, I mean, this is about, again, the evolution of money, because the layperson thinks, wait a minute, money is digital already, isn't it? I can send through, either my bank. If you live in a country with instant payments, you can send instantly money, or through a peer-to-peer app. Everything is so digital. So what are we talking about here? The first point that is important to understand is that when we send these digital um, um, transactions, when we execute them behind the scenes, it's not like actual money moves. It's like there's ledgers that reconcile, and when I send money to you, somehow there's a way that the ledger of my account is adjusted, and debited, and then your ledger is credited. It's not like the money is there. Let's not forget that um, there's this fractional reserve banking, which means that banks lend our money 7 to 8 times more. So we're not talking about movements of money in that way. Now, when we think about central bank digital currencies, it's about being able, the central bank being able to issue money on different rails than the existing ones, blockchain rails, so that they can move in an instant way, and there isn't this clearing and reconciliation that happens behind the scenes. Now, why would it be needed? Well, there's two big reasons. One is, if we're talking about wholesale transactions, meaning, business to business transactions, then the big value is in the fact that you will have less clearing and reconciliation between the two parties. There'll be less time and cost and errors spent on these transactions. And it makes a lot of sense to deploy these new rails. Now, if it's about retail, meaning you and I, it really, there's a debate there whether there's a value with central bank digital currencies, and different central banks and different societies have different opinions, because basically those that are against retail CBDCs are arguing that that will be a way for the central bank and the government to see all transactions on the blockchains, and it's really not something that people want. More importantly, they're afraid of the central banks being able to program
Mm.
these currencies. If they're programmable, what does that mean? That means that they could issue money that have an expiration date, or issue money that can only be spent for a particular reason. So these options of programmable money are like every coin. There's a good side and there's a negative side to it, right? You could, for example, during COVID, if we had programmable money, we could send quickly and correctly money to those in need for specific reasons, right? And that would be a good thing, instead of trying to uh, send subsidies as it happened. And there were a lot of, it was very costly, it was not effective, there were a lot of scams. Uh, we don't know if it went to the right people and how that money was spent, right?
Yes. It does feel like part of the desire for the consumer to hold on to cash has been this belief in the anonymity of cash, this idea that I can still access something that is relatively permissionless. My bank can block transactions. My bank can ask me what I'm going to do with this money when I go to withdraw it. And we're seeing that happen more and more now from banks under the banner of fraud protection. I need to know what you're going to do with your money so that I can protect you from doing the wrong thing with your money. So I think people like the idea of cash, and that, well, I can do what I want with it and no one really knows what I'm doing with it. With CBDCs, do you feel like the conversation is moving ahead of the average consumer, and what should they be thinking about if they're engaging on the topic of CBDCs in their economy?
First of all, back to cash, it's not only the anonymity. There's another issue that is politically sensitive. The world, the sanctions around the world have been increasing over the past 2 decades, in getting more complex. And that the reality is that many countries around the world are where people are not living under democratic regimes, whatever that means. Of course, it's a range. So there is value in many countries in being able to take your assets and move, not through the official system, not because you are laundering money, not because you are doing something illegal, but because of having to flee your country, We have wars, we have non-democratic regimes, we have sanctions that are blanket sanctions, and we have many recent examples of those. So there's that around
Mm.
cash. Uh, and now with CBDCs, I personally think that the big value, at least in the Western developed world, is really for wholesale CBDCs, for interbank flows that can improve the banking system, and that matters for all sizes of businesses, meaning that, you know, whether you're a small business or a larger business, once you have international flows, if those can cost much less, then that's the way. Of course, we could talk about remittances too, that have are a very big market, and maybe CBDCs could be a way. But then, if we don't have harmonization across the world, what kind of CBDCs? And then you go to the question of, right now, most tokenizations of fiat currencies are done with the US dollar, like 99%,
Mm.
right? What does that mean for other currencies? So it's complex. Each the people in each society, in each country, with their currency, they need to really understand what the benefit is to the society of issuing a CBDC. And as I said, it depends. It's not a
Mm.
blanket. What version of a CBDC? What is the purpose of the CBDC? That those are the questions that people should be looking at, and not. It's an umbrella term. There's
Yes.
no good or bad CBDC because they're very different.
Yeah.
So in each situation, one has to look at what are what is the purpose, stated purpose, and how will it be executed. How is the design of it? Especially, in what wallet? What are the intermediaries? Are there limits? Can it be used offline? What does it do to the monetary policy of the country? All these come into play.
Mm. And quite possibly, there isn't a blanket CBD structure that suits every country because every country has different requirements, different economies. But I
Exactly.
do see where you're heading with the benefits at the wholesale level because if that touches all different sizes of business and improves the efficiency of transactions, that speeds up monetary flows. That means people can be paid faster. That all has a trickle down effect, doesn't it, to everybody in that country? So in many ways, it's a piece of infrastructure, just like a road or a bridge or a health system is. It's this kind of important digital infrastructure we need to start getting our governments to think about investing in if it's right for.
It is, and that is why you see that close to 90% of central banks are looking at this. There's very few that have concluded, no, we're not doing anything, and most of them are still looking, researching what makes sense or doesn't make sense, and basically taking a stance of, are we going to do something? What are we going to do? Are we piloting? Are we doing wholesale? Are we doing retail? All this. And, these things take time, consultations in many countries. And in a way, there aren't many actual uh, scaled cases to look at as an example, right? So we are in that early phase. But what's interesting is, because of the explosion of stablecoins, privately issued, right, instead of issued by the central bank, but they are in a way competing, right, with CBDCs, because right now, let's take for example, in emerging markets and globally, people and businesses are using Tether, the dollar stablecoin of Tether, for all these purposes, for their needs. And will they be switching to a central bank digital currency? Will they continue with that? So there's these questions of, does it matter to be an early mover? A central bank digital currency, okay, it's issued. What about the last mile? Will it be adopted? Who will adopt it, and why? All,
Yeah,
all these questions are really intriguing and open.
yeah. I want to just pivot a little bit now and talk to you about blockchain technology, because obviously, as you said, this is underpinning things like CBDCs, it's underpinning stable coins, it's underpinning so many other new innovations. What are you seeing from where you're sitting and the companies you're engaging with that really excites you about new developments in this area, that you would sort of tell people to watch out for or keep an eye on?
I mean, it's really ironically what Larry Fink, the CEO of BlackRock, has been saying for the last 2 or 3 years, which is all around tokenization and the fact that we don't talk enough about it. I guess the headlines are AI dominated, but behind the scenes, there is a big trend and commitment, it seems, from big institutional players to move to this tokenized world. So that is really what I'm watching. I'm looking at what major exchanges, stock exchanges, are doing. Nasdaq, the DTCC, um, in the US, and big players like JP Morgan, like Standard Charter um, in Asia. That there's all these moves that are looking at moving existing assets on the blockchain, whether it is through stablecoin transactions or tokenizing. We've had an explosion of tokenized money market funds,
Mm,
which is extremely interesting, by these big institutions, not only. And what's even more interesting is that they are issued on public blockchains, on Ethereum, Solana, and so on. And just this past week, BlackRock declared that they want to tokenize 1,700 ETFs from their iShares um, world or portfolio. So we are moving in that world, and for me, the big incentive here is that by tokenizing these assets, they can be used as collateral by treasurers, um, at especially at big companies, and can be instantly 24/7 moved. And the collateral management, and therefore cash management and treasury management, really becomes very different in a world where you can move collateral and assets not only between banking hours, but really 24/7, and nearly instantly. So
mm,
that is the big so again, for me, it's more in the wholesale market. I'm not excited that much, or thinking about whether my Revolut app will have tokenized stocks of now there's all this marketing about tokenized stock of private companies like OpenAI or SpaceX or things like that. Yes, those things are shiny, but really where we can have impact is again, at the institutional or the B2B level.
Would you say it feels like some of the early kind of technology and blockchain is now finally bleeding its way into mainstream markets and is finding real use cases in traditional finance?
Yes, I would say so. I would say so. I mean, 2025, was named the year of stable coins. Um, Obviously, it has to do with the regulatory unlock, if you want, through the Genius Act. Um, but yes, that is the case. Suddenly, we have that, and despite the fact that, as we said, it's fragmented still. It's early, but it's happening.
Final question, Effie. Putting your futurist hat on, where are we 5 to 10 years from now? What does the average consumer's life look like? Is it very different from a money perspective?
Yes, 100%. And the 5 to 10 year frame is correct to expect a very different world where really we do have our own agent advisor looking after our interests, and optimizing our moves in a more holistic way. So imagine currently we can have advisors and digital advisors, but do we know to ask the right questions? Do we know? Uh, do we want to deal with optimizing things 24/7? No, none of these are there. So I think that they will be in place, and even the touch points, if you want. Right now, our touch points are mobile apps. It's perfectly possible that in 5 and 10 years we will have a collapse of apps, and you know, whether it is voice activated or some other touch point, it will be a very different world. That's one world, and then that's one angle that we need to realize that, yeah, that the children that are born today will really be in a very different world. The other issue is a much broader social issue around work and the impact of AI, and whether you believe or we believe in the Elon Musk vision of the world of we won't be working, but there will be abundance. I don't know the answer. Universal basic income seems more plausible as a solution to a transition to a world where there will be less employment, that might happen at an accelerated phase. So that's another big change that will impact. And then, I mean, philosophically, we are in a world where we are starting to ask questions that we never asked before. Uh, One question is our purpose to earn our living? Because that is a very big question that is put on the table because of these technologies. And in general, and in closing, I must say that I think it's no coincidence that these technologies are pushing us to the extreme to contemplate on big philosophical questions and beliefs. And maybe they're pushing us to higher consciousness in terms of, who we are. Are we one? Are we um, energy beings rather than matter and focused on material and three-dimensional improvement, and what does that do to the meaning of life, and the beliefs that we have held for centuries.
What a beautiful point to finish on, and very thought-provoking. I like that it loops right back to the start of our conversation, which was there's a philosophical undercurrent when it comes to money and technology, and that's really sometimes where our focus should be in trying to understand it, with the technology coming second. Efi, that's been a wonderful conversation. Thank you so much.
Thank you for having me.
Thank you for joining us for this episode of Long Story Short. If you'd like to connect with Efi, check out the show notes for all the platforms you can find her on, including her website where you can sign up for her regular newsletter. And if you'd like to take a deeper dive, Efi is a contributing author to Brett King's latest book, Branch Tomorrow, quoted as a bold wake-up call for banks, fintechs and policymakers to rethink everything before it's too late. The book can be purchased on Amazon in Kindle format. Thanks again for tuning in, and we'll catch you next time.